Are you tired of leaving your money sitting in a low-interest savings account, barely keeping up with inflation? Do you want to make your money work harder for you and potentially grow your wealth over time? The storm of the COVID-19 pandemic has left a lot of businesses struggling to stay afloat. However, this paved the way for e-commerce businesses and stock markets to strive because of its nature to just be at the comfort of your homes. As more people embrace the idea of multiple streams of income, why not explore the exciting world of stock market investments? In this video, we'll take a look at some stocks that could be worth investing in. So buckle up and get ready to dive into the exciting world of stock investing. Number 1. Apple Incorporated. Have you heard of even small to mid-sized businesses switching to MacBooks as their perception of packaging and branding to attract investors and highly skilled employees? And how about the long line you see on the news when an Apple product gets released? Apple Incorporated is a technology company that designs, manufactures, and sells a variety of products, including iPhones, Macs, iPads, Apple Watches, and more. They're also known for their software, like iOS and macOS, and for their services, like the App Store and Apple Music. In short, they're kind of a big deal in the tech world. Now, you might be thinking, but there are so many tech companies out there. Why should I invest in Apple specifically? Well, my friend, let me tell you. For one thing, Apple has a really loyal customer base. People who use Apple products tend to stick with Apple products, which means that the company has a reliable source of revenue. And speaking of revenue, Apple has a lot of it. In fact, they're one of the most valuable companies in the world, with a market capitalization of over $2.5 trillion as of 2023. That's a lot of zeros. Another thing is they're constantly innovating. They're always coming up with new products and features that people are excited about. And because they have such a large and loyal customer base, they're in a good position to sell those products and features. Plus, Apple has a lot of cash on hand. Like, a lot. They could buy several small countries with their cash reserves. Okay, that might be a slight exaggeration, but you get the idea. Having that much cash means that they're well equipped to weather any storms that come their way and to invest in new opportunities as they arise. Number 2. Amazon. Amazon is the company that started as an online bookstore and ended up taking over the world because they now sell pretty much everything under the sun. And for the record, around 69% of Americans reported that they had purchased products on Amazon in the past 12 months. Imagine that. More than half of the population of America. They also have a ton of other businesses, like Amazon Web Services, which is kind of like the internet's landlord, Amazon Prime, which is like a VIP club for online shopping, and Amazon Studios, which is like a movie studio, but with more bezos. So why should you invest in Amazon? Well, they're a dominant force in the e-commerce world. They have a huge customer base, and because they sell such a wide variety of products, they're in a good position to weather any economic storms that come their way. Plus, with the rise of online shopping in recent years, it seems unlikely that Amazon's business is going to slow down anytime soon. But Amazon isn't just a one-trick pony. Their cloud computing business is also a major player in the tech world, and it's only getting bigger. And with their various other ventures, Amazon has a lot of potential for growth and expansion. Of course, investing in any stock comes with risks, and Amazon is no exception. But if you're looking for a company with a strong track record of success and a wide range of business ventures, Amazon might be a good choice for you. And who knows? If you invest in Amazon and they do well, maybe you can finally afford that giant inflatable unicorn you've had your eye on. I mean, no promises, but it's worth a shot. Number 3. Dutch Bros Incorporated. They're a drive-through coffee chain that serves up a variety of hot and cold drinks, from classic coffee to fruity energy drinks. And let me tell you, people love their Dutch Bros. The company has a cult-like following, with fans who are fiercely loyal to the brand. But it's not just their delicious drinks that are attracting attention. Dutch Bros is also a rapidly growing company. In fact, They recently went public in 2021 and saw their stock price soar on the first day of trading. And according to experts, there's a lot of potential for Dutch Bros to continue growing in the future. For example, Dutch Bros currently has around 480 locations across 11 states. Compare that to another popular coffee chain, Starbucks, which has over 31,000 locations worldwide. In other words, there's plenty of room for Dutch Bros to expand and reach new customers. And customers aren't the only ones taking notice. Financial experts are also bullish on Dutch Bros stock. One analyst from Bank of America recently gave Dutch Bros a buy rating, citing the company's strong brand and culture and their robust growth prospects. Another analyst from Stifel called Dutch Bros a compelling long-term growth story. Number 4. PayPal Holdings Incorporated. PayPal is the digital wallet that has made it so much easier to buy things online without having to remember your credit card number. And their revenue for the quarter was up 31% year-over-year. They provide digital payment solutions to individuals and businesses around the world. That means you can send and receive money electronically, make purchases online, and even pay in-store using your PayPal account. It's a convenient and secure way to handle your money without ever having to touch cash. But aside from this, they're also a rapidly growing company. According to their most recent earnings report, PayPal added 16 million new active accounts in the first quarter of 2022 alone. Plus, PayPal has been expanding its offerings beyond just digital payments. They recently acquired the cryptocurrency security company Curve, which could signal their interest in getting into the world of cryptocurrency. And they're also exploring the possibility of creating their own digital currency, which could be a game changer for the industry. Experts are also optimistic about PayPal's future. According to a recent analysis by Zacks Investment Research, PayPal's strong growth prospects and expanding market share make it a buy rating. Number 5. Citigroup Incorporated. Citigroup is a big company that provides financial services to people and businesses all around the world. They offer things like checking accounts, credit cards, loans, and investments. Basically, if you need help managing your money or growing your business, Citigroup is there to help. They have operations in over 100 countries, so they're a really big deal in the financial world. But what makes it a good investment? Well, for starters, Citigroup is no slouch when it comes to financial performance. But what really makes Citigroup stand out is their dividend yield. At 3.6%, it's more than double that of the average S&P 500 stock, making Citigroup an attractive option for income investors. So, what do I mean by this? Well, the dividend yield is the percentage of the stock's price that you'll receive in dividends over the course of a year. For example, if you own a share of Citigroup that's worth $100 and they pay a dividend of $3.60 per year, then your dividend yield is 3.6%. Compared to other stocks in the S&P 500, Citigroup's dividend yield is more than double the average. Investing in stocks can be a great way to grow your wealth over time, but it's important to approach it with a level head and a long-term mindset. What do you think about this topic? Share your thoughts in the comments section below. Don't forget to like, share, and subscribe to Finance Zoo channel. I'll see you in the next video.